listen, to all Vechain holders, bag holders, hodlers, whatever you want to call it, Vefam. I believe this message will greatly bless you. Listen to this message. Listen to the Apple comparison. Listen to the Vitalik. Listen to what happened to Vitalik, Steve Jobs, a whole bunch of things. I kind of see myself here as well, talking about Vechain. And when people ask me, but when, but when, but when, but when. So again, just listen to this message. I'm telling you, and apply it to the current conditions of Vechain. All right. I when I heard this message, the first thing that came to my mind was Vechain, and I believe that if you're in Vechain, you really, really need to hear this, and for the whole crypto space. I mean, this is just a very, very well done speech.
No?
So here we go.
All right, okay. All right, so let's get kicked off. So back in 2008 and 2009, icons of American business were getting destroyed. Companies like American Express, down 80%. Amazon, down 66%. JP Morgan, down 72%. These were major players in their space, not tertiary companies, major companies that were just getting absolutely destroyed in the 08-09 market. And the reason why I bring this up, because it feels that way for many of us now in the crypto market. Crypto is undergoing a massive shakeout. You have projects that are brilliant projects that have been down 60, 70, 85% at a clip. And it just doesn't make sense relative to the underlying trajectories of these businesses, similar to what we saw in Amex, Amazon, and JP Morgan Chase. So we have to look at where these names are today. So Amex from the 08-09 lows is up 1,000%. Amazon's up over 5,000%. JP Morgan is up over 600%. Each one of these companies are trading at all-time new highs. In today's presentation, what I want to do is show you why we will see a similar event take place in cryptocurrency. And that not only will cryptocurrency recover, but it will trade to all-time new highs. Now, for those of you that are relatively new to crypto, that have come into crypto maybe in the last year and a half, you're probably not used to this level of volatility. But for those of you that have been around a little longer, you'll see that this is not crypto's first rodeo. Crypto has a very long history of insane volatility. So you have a great financial crisis type of event in crypto every 2 to 3 years. Think about that. Every 2 to 3 years, the world comes to an end in crypto, right? The last time we had a great financial crisis was in the 30s, right? They happen 70 to 80 years apart. But in crypto, every 2-3 years, you get your face ripped off. It's just like clockwork. 2011, down 94%. 2013, down 70%. 2014, down 85%. 2018, down 71% so far. Why would any rational person invest in something like this? The reason why is that crypto is resilient. Each and every time crypto has collapsed, it has roared back to all-time new highs. From the 2011 lows, it was up 115x. From 2013, up 17x. From 2014, up 115x from the lows. Again and again and again, cryptocurrency has proved to be incredibly resilient. So even if you had horrible timing with crypto and you had bought at the peak of every single one of these moves, and this is measuring Bitcoin, if you bought at the peak from 2011 onward, you would, from peak to peak to peak, your average gain would still have been 9.8 times your money. 9.8 times your money. If you had been smart enough to buy at the low of each move, you would have made 255 times your money. Okay, you can say, oh, that's an accident if it happens once, or oh, that's an interesting fluke if it happens twice. But this is 3 times since 2011. We have seen that again and again and again. And this doesn't even include any of the price action from 2009 to 2011, where the volatility was even crazier. Hey. So all of that is great, right? A lot of you in this room already know Bitcoin's history. You understand the resiliency. But all of that's in the past. What about the future? And that's what I'm here to talk about today. I'm with you today to tell you unequivocally why I think we are in the middle of the greatest wealth building opportunity of our lifetimes. It will eclipse what we saw in 2016. It will eclipse what we saw in 2017. Enormous wealth that you can't imagine, will be made in the next crypto boom. Now, for the skeptics in the room, am I smoking opium? Am I a guy just talking my book? Is this wishful thinking? I put this slide in here because you should be asking yourself that question. Is this guy just talking this book? Is this guy just convinced himself so much to believe this? Is this all built on hope? I'm not going to ask you to take my word on this. In today's presentation, I'm going to show you exactly why I believe we'll see an explosion in the valuation of the entire cryptocurrency market. Okay, many of you know that I predicted $40,000 Bitcoin by the end of this year. Virtually every announcement that I've predicted, from institutions coming into the market, ETFs going through the approval process, has begun to come true. From the very beginning of this year, I said in 2018, you will see massive institutional adoption of Bitcoin, that they will be putting in the rails in order to onboard their customers into Bitcoin. And that's happening right now, and I'll go into more detail on that in a second. But Bitcoin hasn't budged. Right now it's trading around 6,500, 6,700 in that range. So what gives? Why is Bitcoin not moving when all this good news that I have said all year long was going to happen is actually starting to happen? And what it has to do with right now is something called investor sentiment, right? So when investor sentiment is very depressed, you can have all the good news in the world and people either don't care about it or they don't believe it. And so the reason why I have this slide up here is that I dealt with this exact problem back in 2003. In 2003, I predicted a massive change at Apple Computer, and I was right. The numbers coming out of Apple in 2003 were amazing, but sentiment was so bad that the stock price of Apple didn't go up. In fact, it went down. So in 2003, I started buying Apple Computer, the pre-split equivalent between $10 and $12 a share. At the time, Apple was on the brink of bankruptcy, and this was the general feeling of most of my clients. Are you crazy? Why are we buying Apple? Everyone knew Apple was dying. And I made the case. I said, look, this iPod is amazing. It's the only music player I found that actually works, and Apple Computer is going to open it up to PC buyers. And I don't care what's going on with their current financials. They're going to sell millions and millions of these iPod players. So guess what happens? We start buying Apple between 10 and 12 bucks. Then in the second quarter of 2003, this comes out. It shows that Steve Jobs had unloaded the equivalent of 27 million shares of Apple stock. The shares fell 42% to $7. All in that year, Steve Jobs would sell 55 million shares for a split equivalent price of $1.36. He sold them back to Apple. Apple bought them back from him. Now, the phone calls that I was getting when that hit the wires and when people found out that Jobs had dumped all that stock were unimaginable. Unimaginable. I can't use the language in this room full of wonderful people here, the names that I was being called. And so here was the logic behind Jobs' decision to sell. Apple had dropped from, it was above 40, it had dropped all the way down to $7, and Jobs' options weren't exercisable until $21.80. So in Jobs' mind, the stock's down to $7. He could never imagine that the stock could ever get back to his option price. So we see a lot of people making that same mistake in crypto today. They say, oh, this crypto's down 85%. It can never come back. So that mistake that Jobs made ultimately cost his estate $75 billion in lost profits. $75 billion. So what's the key takeaway from that? In the stock market, sometimes really smart people do really dumb things. I have seen again and again brilliant people make stupid mistakes. Vitalik Buterin, who is the co-creator of Ethereum, sold a third of his Ethereum for $10. $10. Okay, at the peak, he had given away $1.4 billion. Think about that. Vitalik Buterin is much smarter than I am. Steve Jobs was much smarter than I am. So what was the difference between me and Vitalik and me and Steve? What I learned is that being brilliant at creating technology, being brilliant at managing people, being brilliant at running businesses does not mean that you are a brilliant investor. Does not mean that you are brilliant at understanding how markets work. They are two very different skill sets. So what did I see in 2003 that Jobs didn't? What I saw was every year 169 million PCs were being sold and only 3 million Macs were being sold. I saw that people loved the iPod and were going crazy about it, and Apple announced that they were now going to open it up to the PC market when there was maybe just shy of 1 billion installed PC users. So I said, okay, we've got an amazing product. It can only sell into a market that sells 3 million a year. It can now go into a market that sells 169 million a year. You don't have to be that bright to figure that out, that they're going to make more money. You don't know exactly how much more money, but if you go into a market that's almost, 50 times bigger, you're going to make more money. So I told my clients, I said, look, I don't care about jobs dumping his stock. The iPod is revolutionary. Mac users love it. So PC users will love it too. I said that Apple's iPod revenue and profits are going to explode higher. And I stuck to that story all through 2003. And Apple stock did barely anything. Now, this news was public. Okay, this was not, I didn't have any special insider information about this news. So by 2004, the stock doubled, and Apple themselves commented publicly in their 10K what I had been telling my clients in 2003. They said, iPod sales during 2003 were favorably affected by the introduction of substantially redesigned new models which are compatible with both Macintosh and Windows operating systems. That information was available to anyone in 2003. The same way the information I'm about to reveal to you has been available for most of this year in crypto. I don't know why one day you wake up and nobody cares about a piece of news, and the next day you wake up, everybody cares about it, and prices go through the roof. I don't have an answer for that. I wish I did. Ultimately, at the end of the day, my job is to do the research and look at the pace of innovation and the pace of adoption, all right, and find great ideas and focus on that. I can't control investor sentiment. None of us can. What I do know from my history is that eventually investor sentiment catches up with the reality. And so as adoption increases, which was what happened here, investors suddenly wake up and they say, this iPod thing looks kind of interesting. Maybe we should buy some Apple stock. So again, I didn't have any special knowledge in 2003. Apple had already announced in early 2003 that PC users would get the iPod. It wasn't until 2004 that the stock started to take off. And of course, Apple's gone up 200x since then. So the reason why I have regaled you with this story from my past is because crypto is following a similar adoption path. And this is the key point that I want to get across today. And it's easy to dismiss this and say, yeah, but the market isn't listening. Yeah, but the market isn't listening. Friends, this is Apple all over again, going from a tiny market to a huge market. And this is why. There are 500 million global stock investors in the world, and rough estimates say there are 35 million global crypto investors. I think it's a lot less than that. It's tough to get really good metrics on that number, but I was conservative and put 35 million. So what I'm suggesting is that just like Apple Computer in 2003, crypto is on the cusp of massive growth. And I want to tell you why. Because of these guys. I'm here to tell you that crypto is growing up. And the catalyst is the ultimate catalyst, Wall Street greed. The rocket ship that will propel this market to a valuation that nobody in this room can comprehend, even the wildest of us in this room, is Wall Street greed. What does that mean? Well, you got to blame Binance. Binance is a cryptocurrency exchange. It's barely a year old. They're going to make $1 billion this year. It's not revenue, it's profit. $1 billion in profit. Binance is now more profitable than Deutsche Bank. Let's put that in perspective. Deutsche Bank's been around for 148 years. More than 100,000 people work for them. Binance is more profitable than them. And they've done it in a market that's tiny. The cryptocurrency market is tiny. We have a valuation of around $200 to $220 billion and 35 million investors that have to be somewhat tech savvy to be in this space. Let's look at the global stock market. Global stock market's valued at $100 trillion. That's according to Goldman Sachs. And it's estimated there are 500 million stock buyers in the world. You can see relative to crypto is tiny relative to the stock market, but the profits are huge. And this is what has piqued Wall Street's interest. So, as I mentioned, 500 million people worldwide own stock. 35 million own crypto. So that leaves 465 million more people to come into crypto. So Wall Street is interested in this space, not for the 35 million that are already in it. They are interested in the 465 million other customers that they have that they want to bring into crypto. Now, I will tell you, it is dangerously naive to think that those 465 million people are going to come in without the help of the global financial system. You need the global financial system to onboard your average investor into this asset class. Because let's face it, the average person does not want the responsibility of custodying their own Bitcoin. They don't want the responsibility of moving Bitcoin from one wallet to another wallet. And that is the opportunity in front of traditional finance right now. That is the game plan that they are working on. Build a presence in crypto now, and then milk the world's investors for billions in fees. This is the vision guiding the smartest and largest financial firms in this country. I will say this. You think we're in an ICO gold rush or a token gold rush? You're thinking too small. Anybody, current players in the space right now, the Binances of the world, the Coinbases of the world, the Geminis of the world, are all bit players in the middle of a full-fledged battle between the world's largest banks and financial firms to dominate the future of crypto and crypto issuance. Coinbase will not lead us into this bright future. Binance will not lead us into this bright future. They're not trustworthy enough in the eyes of traditional investors. It will be big banks. The bet being made right now by some of the smartest money on Wall Street is that they can funnel the world's stock investors into crypto and divert hundreds of billions of fees into their hands. Now, this is not wild musings on my part. I want to show you why I have come to this conclusion, right? Opinion or facts. Think about this. The Intercontinental Exchange, which is the second largest stock exchange operator, they operate the leading market for Brent crude oil futures, the second largest market for trading in WTI crude futures. Massive, massive markets, right? On the New York Stock Exchange, hundreds of trillions of dollars of notional value of stocks and futures get traded across ICE's different exchanges every single year. It's trusted by millions of traders around the globe. On August 13th, ICE announced it has been working in secret on a project called BACT for the last 14 months. BACT will integrate with each of ICE's U.S. futures markets and clearinghouses. So I want you to think about why that's important. It's a direct link to the global financial infrastructure. If you're a pension fund, if you're a money manager, you use an ICE exchange every single day. You'll now be completely connected to that network of buyers and sellers with crypto. So I want you to think on this. 2.5 years ago, when I had watched a speech and finally got sold on Bitcoin, and I came down to Florida and had a chat with Amber in a room full of publishers, and I said, I must have looked like some wild-eyed, just nut job. I'm recommending Bitcoin. And they looked at me and they're like, no, you're not. You're crazy. Because at the time, Bitcoin was thought of a refuge for money launderers, terrorists, and pornographers. Banks wanted absolutely nothing to do with Bitcoin. When I first started writing about Bitcoin, people were getting their bank accounts shut for connecting with Coinbase and operating buying Bitcoin. So I want you to think about how far we've come from 2016 to now, where the owner of the New York Stock Exchange says, you know what? Yeah, this Bitcoin thing is real. We're going to start trading it. We're going to start opening it up to all of our traders. So this is the CEO of BACT. She's been very clear in her intentions, and this is a great quote. BACT is designed to serve as a scalable on-ramp for institutional, merchant, and consumer participation in digital assets. I cannot overemphasize how important the BACT news is. But BACT is just the beginning. NASDAQ is starting to come into this market. NASDAQ just purchased a company called Cinnabar, which has a trading solution based in Sweden that already supports cryptocurrencies. NASDAQ has started up their DX cryptocurrency trading platform. They already have 500,000 people signed up on their pre-launch. Goldman Sachs is coming in. They already invested $400 million into Poloniex, a cryptocurrency exchange which they are going to register. According to Bloomberg, Goldman is going to be launching a crypto trading desk and crypto custody. This just came in. Fidelity. Think about this. Fidelity has 27 million customers. 27 million. 7 trillion in customer assets. They process 785,000 trades per day. Abigail Johnson came out and said, you know what? We're putting it on the homepage. Think about that. If this was in 2017, Bitcoin would have doubled on that news. It just shows you how bad investor sentiment is right now, where we have some of the largest financial firms in the world saying, you know what? Bitcoin isn't a fraud. Bitcoin is here to stay, and we're going to open up all our platforms so people can buy it and sell Bitcoin. Huge, huge, huge news. TD Ameritrade's coming in. They have 11 million customers. 1.2 trillion in customer assets. I want to read you the quote from their VP of Trading. Our retail clients are seeking to access and trade digital currency products in the same way they do with traditional capital markets through a legitimate, regulated, and transparent exchange. Guys, they're giving us the playbook. They're not being coy. They're all coming into this space. Morgan Stanley, coming into crypto. Bloomberg reports that Morgan Stanley, the sixth largest bank in the US by assets, is creating a derivatives product that will give traders synthetic exposure to the price of Bitcoin. 3.5 million wealth management customers, 2.2 trillion under management. Citigroup is coming in, 200 million customers. This is according to Business Insider's Frank Chaparro. Sources close to Citibank revealed that the $175 billion New York-based bank will offer crypto custody solutions to institutional investors, and they are going to launch something called digital asset receipts, DARs, which are like ADRs. Okay, so Citigroup will allow institutional investors to invest in cryptocurrencies in a fully insured and regulated manner. Even JP Morgan is probably coming in. This is according to a report that JP Morgan has tasked their fintech and in-residence program head, Oliver Harris, to create various strategies the corporation could use to help its clients invest in the cryptocurrency market. CBOE is coming in. As we know, this is the ETF that we're waiting for. As I've said, SEC can push this all the way out till March. They're going to come out and say something in December. I would love to see an ETF get done in December. Would be very, very bullish for the price of Bitcoin, but they can push it out to 2019, March of 2019. Hopefully what I'm showing you here is that the future of crypto as an asset class is much bigger than the announcement of one ETF. For instance, Northern Trust, they custody over 10 trillion in assets. They are coming into the space. So the question we have to ask ourselves, right, is why are these massive financial firms taking the reputational risk of getting involved in Bitcoin? These firms collectively make hundreds of billions of dollars in profit, right? Why take that risk on a backwater market that's barely $220 billion big? I want you to think on that. Why would they bother with crypto? Their existing profits are huge and established. I believe it's because they are aware of the enormous profits that lie ahead for the firms that pave the way for the rest of the world to get into crypto. And so what I want you to remember, it's about the 465 million people that don't own crypto yet, not the 35 million. Just like how Apple went from a tiny market of just a few million into an enormous market of 1 billion potential users, so will crypto go from a tiny market niche of 35 million to a massive global market of 500 million. And it will be Wall Street that will take them there. This next slide's for my good friend Kathy. But when? But when? When, Tika? When, Tika? When? This is how I felt all through 2003. Yeah, it makes a lot of sense. I could see that. But when is this going to happen? It's a natural question to ask. Many people in the crypto space are feeling exactly like this right now. So what I say to people that ask me this question is, as investors, we must focus on what is knowable. We can't know the exact date the market wakes up, the sentiment shifts, and they start pricing this in. The same way that I couldn't know exactly when the market would wake up to Apple. So here's the claim that I make to you today. All we need to know in order to make a fortune in crypto is that these events will take place. Cryptocurrency will be open to a mass market of buyers. That's all we need to know. That's all the knowledge we need. The same way back in 2003, all the knowledge you needed to make a fortune in Apple was they're going to open up their platform to PC users. The fact that this will happen, that Wall Street will open up their platforms to cryptocurrency, is all the knowledge we need to make a fortune from the transformation of the crypto market from a tiny backwater market traded on unregulated exchanges to the multi-trillion-dollar asset class I believe it's destined to become. Now, I'm not asking you to trust in me or in my view of the crypto market. I'm human, right? I'm fallible. Maybe I've just been completely obsessed with this. I'm not asking you to believe in me. I'm not asking you to make that leap. All I am asking you to do is believe in the unadulterated, relentless greed of the global financial system. That's what I'm asking you to believe in today. Forget me. Do you believe in the greed of the banksters? Because, yes. Let me get an amen. That's right. The bankers will turn on their well-oiled lobbying and marketing machines, and they will march 465 million of the world's investors into crypto assets, and they will make hundreds of billions of dollars in fees doing so. Friends, in closing, I will say to you, be rational with your position sizing. Stay calm and know that the future is incredibly bright. Thank you.